Jim Cramer here with our energy expert, Dan Dicker. Dan, I have been in awe of Schlumberger since 1982, when I happened to stumble into one of their recruiting sessions at MIT. I've always felt they're the best of the best. They also tell the truth. What do you think they're thinking right now?
Well, I love the piece you did on Mad Money because, first of all, you compared the price of Schlumberger to the oil price, which I thought was, first of all, the right way to kind of look at Schlumberger. And, you know, we've sort of looked at the oil services as less of a forward-looking device, the stocks at least, as the E&Ps. So we've sort of seen the E&Ps get absolutely hammered with the oil price, where something like Schlumberger, look, it's down 30%, but compared to some of the E&Ps, it really hasn't taken the hit it should have. I put together a chart, or at least there's a chart that I think is coming up on the screen now, of the oil price versus oil rigs, and you can see that there's a lag from one to the other. So projects, obviously, that were undertaken in the spring and summer of 2014 have yet to, they've just started to produce now. So as the low oil price starts to hit the oil patch, this is when oil rigs will start to really collapse.
And that means Schlumberger has to take numbers down.
That's correct. Add to that the fact that all of the oil service companies are absolutely slashing costs to all of their guys. They're trying to shore up market share because they know it's going to be a very, very competitive environment going into the next year. So in all ways, I don't think Schlumberger has taken the disaster yet that it's sort of entitled to.
They've taken a charge, but well, let me ask you this, Jim. Yeah, but I was looking at was, okay, well, last time Schlumberger was at this price, oil was $100.
Right.
Why isn't it at, why aren't people just saying, you know what, Schlumberger, I'm leading up to something here. It was at 118, you know, Morgan Stanley said it was 118, you know.
It's really great,
so are we going to see massive downgrades of Schlumberger like we haven't seen yet?
I think you have to, but what will happen first is that those hard numbers of rig counts dropping, when those really start to hit the skids, when you're losing 50, 100 a month, 200 a month, I mean, when things get really bad.
Which we've seen before, they're probably even faster now.
And in fact, Goldman Sachs came out with reports saying that the decline in rigs this time will be so monumentally fast. It will absolutely just fall off the table. So I think once you start to see that, that's when the analysts figure out, maybe it wasn't the best stock.
Okay, no bottom Schlumberger until we have these cuts. Thank you, Dan.